So we have the first lady of Bowery Capital. We have a leading voice in 3D printing. We have a leader in international investments in consumer internet and SaaS. And we have a visionary who's connecting startups with American manufacturers, which I think is really cool because who knew that we still had manufacturing going on? Let's be honest. So I'm going to start with Keegan. Is there any seed-focused funds out there? Is there anyone else other than Bowery? Like, let's talk about the seed stage because, a lot of the companies that I meet, you meet, if they're not getting angel and seed funding, it's really hard to get to land on Elodie's desk for later stage. So,
yes.
And talk about what you look for in the seed stage.
Yeah, of course. So for those of you who don't know about Bowery Capital, we're somewhat new. We launched the fund last May, so we've been around for a little over a year. We are early stage seed focused, very, very laser focused on B2B enterprise software, which is a bit rare to have that strict of a focus for a seed stage fund. But yes, we lead rounds, but we also co-invest with seed funds. So, whether it's Google Ventures, Flybridge, First Round, there are plenty on both coasts to sort of cover all sectors of companies.
And what at the seed stage are you kind of looking at in terms of where the companies are at with their product or attraction or?
So seed stage funds will definitely look at, different levels of where a company is. For us, because we're focused on enterprise software, it's very tough to get involved before you see, even one pilot customer on board. So, a paying customer would be great. So we tend to look at companies that have a product built and are working with a big, Fortune 1000 company to sort of prove that their product can be sold into other Fortune 1000 companies of the like.
Cool. Tanya, you had a great question.
Hi.
Sort of that angel versus micro versus institutional. Now, how many with Makers Row? How much have you raised?
We raised $1 million last year.
Okay.
And
was that your first raise after friends and family? And
we didn't have a friends and family. We did an incubator.
Okay.
And then we just raised a seed round.
Great.
Yeah.
And why the choice with the incubator?
Well, Matthew and I, this is weird. Matthew and I hadn't started a tech company before. We had started a leather goods line before Makers Row, and so we had bootstrapped that company and had revenues and really wanted to get our feet wet with a tech company. And so we tried to find an engineer on our own. We couldn't. So we got into an incubator, and we used the entrance into the incubator as leverage to get an engineer. Incubators also connected us with a few investors, none of which actually we went with, but it was good to get our feet wet with the whole tech investment world.
And so in the $1 million you raised, how did you navigate and figure out, all right, who are these people and what was sort of your discovery as you talked between angels and micro and institutional and your thoughts at the end of that raise?
Yeah, I mean, Matthew and I were really focused on building the business first. And so we launched the site. We still had revenue coming in from our old company, so we were okay in terms of paying rent and things like that. But we went into the seed round, we just got obsessed. I think was like the best way to explain it. We got obsessed. We had a large spreadsheet. We researched for hours, and we really wanted to get to know these people. We found a few resources. The obvious ones are AngelList, TechCrunch. The ones that we didn't know about until we were into it were thefunded.com, which is useful. I don't think it's been updated as much, but even the old information was useful. We found a few obscure blogs, a few non-obscure blogs. We went into hours and hours of not sleeping and just researching. And that was really helpful. I felt good about that. And then we started out taking a few meetings and learning from those meetings. And every no that we got, we learned from and went from there. Hi.
Another Keegan.
There's another Kegan who's slightly rained on.
Your hair looks good.
Thank you.
So that's how we started it, and a lot of it started off with introductions from the incubator. Some people reached out to us because we had gotten press, and so that was helpful. Some people just cold emailed us, and that was interesting. And then we just started narrowing down the list. The spreadsheet was really helpful. We wrote down everything, the feeling that we got, the gut feeling, like what their feedback was, what our feedback, what we wanted out of them, how good of a fit they were. Ultimately, what we found was that the best investors were really the people that we got along with, and the personality was huge for us. We didn't want any assholes in our round, and I'm really happy that we don't have any. And
Kathleen Utech will be glad to hear.
And the biggest thing was finding the personality fit, but also the people that understood our market was huge for us, because some people thought that manufacturing didn't exist in the United States anymore, whereas other people understood the manufacturing landscape, and they understood products, and they understood the need in the market that we were filling. And for us, that was really, really important.
I mean, what you're expressing, and part of the reason for letting this part of the conversation go on is you were obsessing over the fundraise as much as my guess is you were obsessing over your product. And that for me is that one piece where a lot of founders don't realize, is particularly at the early stages, like that fundraising is that equal obsession and takes over like all your time. And so when you think about the last panel and the conversation, all of a sudden you're just like, you have two full-time jobs, obsessing over your product and obsessing over your fundraise. Insight Partners, you're way down the other end of the stream. Talk about where you're investing and what you're watching earlier in the market to sort of be like, come to me later stage.
Yeah, so our fund focuses a lot on, is this loud enough? We focus a lot on later stage companies. So we're looking for businesses generally that are either at a 10 million revenue run rate, or at least have accomplished 10 million of revenue, where you're looking to invest anywhere from 20 to 400 or 500 million dollars. So there's a lot of flexibility in terms of the size of the investments that we do. But I think one thing that holds true from our perspective, and I think this pulls all the way back to seed funding, is that the things that we look for primarily are team. So we're looking for people who really believe in their product and are very passionate, but also people who have at least tried to think through every angle of their company, not people who are coming in and saying like, oh, when I get 10% of this market, I'm going to have this much revenue. And you're like, okay, but like, how do you get that 10%? And like, is there anybody else that's gotten 10%? Like sometimes you kind of miss like basic fundamentals. And so having a team that's clearly demonstrated that they have a firm grasp on their market and are like really thinking through all the alternatives before making a decision is very important. Obviously, traction is something that we look for. So while we're typically categorized as a growth stage fund, I personally have done almost all of our early stage investments at Insight. So
stop it! You do early stage?
Oh my gosh! So my
dirty secret: the late stage investor does early stage. Okay.
Yeah. So like my favorite deal is when I lead a lot of international stuff actually, and this is the first year I've started focusing on the U.S. But I led an investment in Brazil where the founder sent me a text message. We were friends. December 28th, and he said, I'm starting a company called hotelurbano.com.br. And I knew Peixe Urbano was like the Groupon model, and hotels clearly are within the hotel segment. We were already investors in Trivago, which was a very big, successful travel company out of Europe. And I was like, okay, give me 3 weeks and I'm going to invest. And he was like, we don't even have a website. Like, we're literally just a name. And I was like, I know, I've seen you with your other businesses before. I know what this market is. I know where it's going, which brings me to my second point, which is market. Like, I think that there's a lot of people who find, challenges, and they're excited about creating a solution for those challenges. But a lot of times it's very difficult, especially when you're going to a growth stage round, to be raising a lot of money in a market that has ultimately a very small total addressable market size. And so thinking through market around how do you address the largest market possible is very important to us. And so obviously with Hotel Urbano, they were addressing travel in Brazil, which was a very, interesting and growing market. And then I think the last thing that we look for obviously is traction. And I think traction comes in a lot of different ways. When we invested in Twitter, for us, traction was the fact that Twitter had 100 million active users after a very short period of time. With Hotel Urbano, within their first 2 weeks, they had 250,000 registered members, which is clearly a lot of momentum that you're gaining early on. And so even though their revenue was clearly lagging, the fact that we could see that there was a clear traction within their market was very indicative of upcoming growth and success. So that's kind of what we look for.
Very cool.
Question?
Hi.
Hi, I would love to. Can I jump in there and comment on that?
This is exactly what I want.
Awesome.
Jump in.
I just wanted to comment a little bit on the market piece of what you were saying. I thought that would.
May you introduce yourself?
Oh, sorry.
Sorry, guys. My name's Kegan Schouwenburg. I'm CEO of Souls. We're a Series A funded startup based in New York that's focused on the future of footwear using 3D printing to create customized insoles. So on the market aspect of it, when I tried to raise venture capital, I think 4 years ago for my last company, I knew nothing about raising venture capital at all. I was like Googling online. I was like, oh, VC is a thing. and I had this idea and I wanted to create this customized jewelry website. And I was like, well, why don't people want to give me money? I don't understand. This seems like a good idea to me. I could build a website. I could have a company. Nobody wanted to give me any money. Didn't understand why. Flash forward 4 years, and I came back to the point. And I was like about ready to start another company, and I was like, okay, I'm going to tackle the orthotics market. I'm going to do it with 3D printing. Here's what the medical segment looks like. Here's what the consumer segment looks like. Here's what our initial traction and growth plan is going to be. Here's how we're going to knock out these distribution channels. Here's the opportunity size, and here's how I think we're going to reach it with revenue. And then all of a sudden there was money. So this was a really interesting learning for me that it was much less about like I have this idea and I want to start a company. And much more about, okay, is everything in line? Is the idea that I have for this business in line with the market? Is this in line with the problem that exists? Is it in line with where we're at with technology today and for us manufacturing processes today? And if all of those things line up and all of those cards make sense, then suddenly like there's money. And while it was still challenging and in a lot of ways it still felt like running into a wall again and again and again during that first fundraise, the subsequent fundraises since then have gotten much, much easier as we move forward through this market and hit the numbers that we thought we could hit. So that was an interesting learning on my part.
Yeah, and I'm going to add to that as well. So I'm Elodie Dupuy. I work with Insight Venture Partners. Again, we're about $8 billion growth stage fund based here in New York City. I typically manage more of our international presence, but have been doing a lot more in the U.S. recently. And I have kind of a very broad focus because I focus geographically, not vertically. So I do software, I do consumer, I do media, I do kind of everything. And so one thing that I want to add on to that is when you meet with entrepreneurs, and there's really two kinds. There's a kind that's very conservative, and that comes across and tells you like, we're probably going to do 5 million of revenue this year. And you're looking at your numbers and they're like, you're probably going to do like 10. And they're like, well, if everything goes right, we'll do 10, but like we're budgeting 5. From an investor's perspective, that's fantastic because I think a lot of people are like, oh, I want to give aggressive numbers because I want to get the highest valuation because I don't want to take dilution, blah, blah, blah. The reality is when you present numbers that are overly optimistic and you miss them, it's really painful for you, and you not only don't get that valuation that you wanted, but you
can pay with the valuation early or later.
Right. No, but
take your pick.
The reality is you're gonna not get the valuation you wanted in the first place, and you're also losing credibility with your investors, right? And so there's some companies that we've invested in, like especially our firm. We are very big on doing add-on capital, so we'll do an early round now, and then we'll put in, as you grow, we'll continue to fund you as long as you need capital. And one of the things that I've really noticed holding true, I've done about 15 investments since I've been at Insight, is the teams that come in and consistently are conservative, we actually tend to just value them slightly higher because we know in our heads that they're going to beat that valuation or their numbers. Like we just know that it's actually going to be a better deal, and we're not trying to like, maybe we're unique in this, but we're not trying to like screw you out of 2 points of equity. Like it's not that big of a difference to us down the road. We're really all about trying to align ourselves with our entrepreneurs and making sure that they don't feel like they're getting screwed and we don't feel like we're getting screwed. But when you consistently under-deliver on numbers, it's really something that hurts you a lot, especially because the reality is And again, I'm saying this from the investor's perspective, so sorry if this hurts some people's feelings. But sometimes you'll see companies go out and try to do a big fundraise, and they're going to come into your office and be like, "We're raising $20 million." And then when you start asking them questions, they don't really know why they're raising 20. It just seemed like a good number, or like nobody wants to do a $7 million round, so they're just making it bigger. And the reality is they don't end up raising that round. And then they'll come back 6 months later, 8 months later, 2 years later, and we keep that data. Like I'm very good with numbers. I remember what people said they were going to do, and I check to see if they actually did it. So if you're not able to raise that round and then you come back and you actually missed all your numbers, like you're just starting off on such a bad foot for that second round that's really not worth it.
I'm going to pick up on a point you said, sorry if the founders feel bad. I mean, and it comes down to your point on, your second company in raising. You're asking for someone else's money. Mm-hmm. This is not charity sitting up here. They want a return. I'm always sort of surprised when I see founders and they've got this little puss face on. And I'm like, it's like the bank and a mortgage on your house, right? They want you to repay it. It's not that hard to figure out. I mean, I sort of think the being honest on it, and thank you for being
oh, I'm pretty blunt.
Blunt. I think that's actually more useful, more favorable, more helpful than kind of
dancing around the issue.
Dancing around in candy language.
Yeah.
Keegan down there at the end.
Well, I was actually going to try and jump in on your whole market, just sort of having everything. It's important. Having everything as a seed stage fund, it's very different than being able to look back at historical numbers and seeing whether or not you're actually hitting them. A lot of the numbers that are being placed in front of us are, for lack of a better term, made up. But so when you have, so it's sort of that overshooting that when you put those numbers in front of an investor, it's kind of like no one's ever actually hit those numbers before in your market. So I don't really know what you're thinking about. You should really go back and evaluate this and sort of really think about your market. A lot of companies that we look at, going back to the market thing, is they tend to make this their market when, putting it at the 15 to $70 billion market type thing, when really you're this much. And be honest, that's what we care about. If you can then dominate that small market, that's much bigger to us than seeing that it's a $50 billion market. So really, it's those numbers and really having all of that in line, even at seed stage before you've raised money, to come into us and seem as though you really know what your company can do is a big deal to then get to that next stage.
Yeah.
I think there's this huge misrepresentation or miscommunication that goes on between the investor and the entrepreneur for first-time entrepreneurs that are looking to raise money and haven't ever raised money before, because you look in the media and you the investor is sort of this big scary thing that's there's people and they have money and they're in
the big scary VC. Oh, very big and very scary.
It's scary. My first pitch meeting, I walked in, I was shaking. I think I walked out crying too. It did not go well. But it was really, I was sweaty. Well,
it takes back to your childhood. It's like going into your parents and asking for your allowance. No one likes to ask for money.
It's awful. And I remember going in, I thought I was so prepared. I thought I had this fantastic deck. My deck gets ripped to shreds. I'm just oh God, these people I'm now friends with this guy. So I can, but it's come full circle. But it's really, really scary. And what that contributes to, what that leads to is basically as an entrepreneur, you're oh yeah, billions of dollars. We're billions of dollars, we're going to sell all these people. We know we don't have a product yet. Yes, we're pre-product and pre-revenue, but billions of dollars. And you think that's what you're supposed to say, but you're not. And so I went from that, and then that first meeting was just terrible. And then finally I went to, I think maybe the fifth meeting and started getting better. And I went in and I pitched to an investor who didn't invest at that point, but actually ended up coming back and investing in both our seed and Series A. And I sat down in front of him and he was how much are you raising? And I was this was last October or last September maybe. And he was how much are you raising? I was we're raising $500,000. And he looks at me and he's you want to start a manufacturing company in which you're going to build your own software. You're going to change a market. You're going to create a vertically integrated supply chain. You have a massive branding challenge on the consumer forefront. You're going to build computer vision, scanning technology that works off an iPhone. And you're telling me that you're going to do that all with $500,000. And I look at him and I'm $750,000? I'm just whatever you will give me, I will take. And Seriously, I'm not even kidding. Like, it's like, please just give me money. He didn't give me money at that point. He did give me money later on. But what I'm getting at is I think that what you were saying was absolutely correct in that you have to know the exact number that you're raising, why you're raising it, and what that's going to get you. For that round, we ended up raising 1.75 million, and that was to basically build the product and then gain validation in an early market of beta testers, which we did, and that was great. It wasn't to go to market, it wasn't to build massive amounts of sales. Like, we just wanted to build like the basic product, and then when it came to raising more money, it was like, okay, we closed out another 6.4 million so that we could do our initial medical go to market, so that hopefully, come, let's say, late fall, once we have numbers, and it's time to come around and talk about that next raise, it's based off a new set of criteria, and then that becomes about moving into the consumer sector. But each raise has very specific goals with very specific things we want to achieve with it, that I feel I'm getting better at understanding the cost of, but definitely had no idea and was just sort of like picking random numbers that like seemed about right for what I read in the news. Like, that's what a seed round was, when in reality, investors much prefer a very clear plan of like, yeah, hey, I'm going to raise a much larger seed than other companies, but frankly, like, what we're doing is really expensive. Here's how we're going to spend it. Here's what the IP we're going to create with it is, and frankly, like, here's the market that will eventually be able to attack with it.
Can I ask you a question? So do you mind?
Oh yeah, I love this.
Just because you were saying the company you had before, you had no success really in raising money, and then so now you just sort of you did more research, you knew the process a little bit better, you knew what to show your investors, and you knew what you wanted to build in the market you were entering. Did you I have friends, I'm on an advisory board of a company helping them raise a seed round right now. I mean, the whole sort of first round of that, and you see a lot of companies and entrepreneurs do this, where it's very, okay, I'm going to like spray and pray. Yeah. And like, you know your market, you know what you're building, you know what your product is, you know who your customers are. But in the seed stage, it's kind of like, I'm literally just going to go to like the first ones I find on Google, and I'm going to build this spreadsheet. I'm going to send it around to everybody and see who comes back. And then your second round, did you sort of fine tune who you were going after more? Did you go after like strategic money at all? Just because, because we're so focused, I see so often that companies that come in or companies that, reach out to us, they don't really know who we are. And we tried to be, when we launched, we tried to be very diligent about, this is what we're focused on. This is what we're experts on. We don't do consumer facing and all this stuff. So I just wonder how you sort of
spray and pray. That is, I have never heard it said better. God, it's so raising seed money is like the hardest thing, and nobody wants to talk to you, and nobody wants to give you money, and nobody will take you seriously, and everybody's laughing, and it's just really, 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 really hard.
That true.
My first boss out of college finally called me up, and he was like, I'm going to write you a check for $10,000. And I was like, oh, thank God somebody's going to give me money. And then that check showed up, and it was $15,000 instead of $10,000. And I was just like, had never been, with a note that said, it's hard. So we definitely went from that. And I am thankful. I think we had 17 people in our seed round, and I am thankful to every single one of them every day. We would not be here without them, and we never would have raised more money without them. So you do the best that you can, and you're grateful for anybody that'll help you get there. For the Series A, yes, we were much more strategic with that. There was one main lead that carried on, that led our seed round as well, and led a Series A. I brought on one strategic partner from Palo Alto to support, that had a much larger fund that could do a Series B, and then a few people carried on that were main partners. So
I'm going to jump in on that.
Yeah, please.
So this is a little bit outside my area of expertise, but I think that something I'm hearing here, which really surprises me, is that everyone goes after seed funds. The reality is that a lot of the companies I see were funded by people who knew other people. So like if I were looking for funding, I would talk to successful entrepreneurs, because usually they get a pretty decent paycheck somewhere along the line. Either like somebody gave them a secondary round, or like they sold a company and now they have tons of money and they're probably really excited about trying their luck at investing. And I think that there's probably a way, I mean, this is outside my life, but like there's probably ways to be networking with people who were already successful and who have, if they don't have the money themselves personally, they probably know somebody personally who has money. And rather than approaching them with like, here's my pitch, here's my deck, here's the story, here's what I want to do, I think that relationships really count for a lot, and you usually end up judging a person's competence, ability, and potential more through conversations that you have about a variety of topics, whether it's like politics or whether it's, the state of the economy or whether it's, some weird quirk that they have and they're really focused on like how to grow plants super efficiently, like whatever it is, like usually you can end up being like, wow, this person's actually really cool and like pretty smart. And when they come back to you and say like, by the way, I was thinking of starting a business and like, here's kind of where my ideas and blah, blah, blah. And you're not approaching them asking for money, you're approaching them saying, here's a thing I have, like what are your thoughts about it? I feel like if you actually have a strong business plan, people will get really excited and be like, can I invest? And that's probably the best way to get your seat. And sorry if this is ruining your market, but like that's probably the best way to get.
No, I mean, we
funding.
invest with individuals. One of our first investments with Bowery, Gary Vaynerchuk was a huge part of it. Mike Lazaro, who is founder of Buddy Media, these are very successful entrepreneurs. Yeah. Oh, Buddy.
Yeah.
So it's, we don't just look at, to co-invest with other successful, well-known funds who have great portfolios. We do look, is Gary Vaynerchuk excited about this and why? Let's talk to him and why, let's get involved with him. To your point, that doesn't piss me off. It's actually right.
Also, something that we didn't realize in the beginning was that you don't have to raise the million all at once. And so one thing that, and going back to finding the strategic investors, at first we were speaking to people that people introduced us to, which was logical. And then what we realized is that getting an investor and getting money from somebody and having that relationship is really similar to getting married, and almost more than that because you can't really get divorced, and it's not as easy as a divorce. But so we started being a lot more selective about who we let into our round. And what really helped us be more selective and have that flexibility on being selective was getting angels to invest early. And so we just did a separate convertible note earlier to hold us over so that we could really find the institutional investors and the micro VCs that we really wanted and were really excited about. Because some people just take longer to make a decision, and we wanted to wait for the people that we really wanted.
Which also I want to say your point on the money gets to the point that Joy made before, that a lot of this is it's not just about the money. It's what else are those investors bringing to the table, and are they being helpful, and do they know those markets, and do they have those other contacts, and do they know what you're actually trying to achieve, and see that bigger vision. So it's not just the check.
Well, and also, you guys are talking about entrepreneurs kind of overselling and under delivering, but I think that investors actually do that a bit too, where they say I'm going to help you so much, I have all of these connections, and I think that some people do, and some people over deliver on that, and some people under deliver on that, and I think that it's important also as an entrepreneur to be able to see who's the person that's actually being a little bit more conservative about their connections and their helpfulness, and the people that are and that are really genuine.
Yeah, I see so many entrepreneurs, and I'm going to say focusing on getting that money that you're so excited that someone's going to give you the money that you don't actually stop and say, all right, is this the right money to take, or am I going to have just as looking, Elodie's going, oh God, some of them, investments in their portfolio. It's like, why didn't we know this person was going to be, psychotic by the time they got to this point? But the same thing with some of those investors, because they don't deliver, right? And they're asking you for reports and reporting at an early stage, which, would make Wall Street cringe. So,
Yeah, I think there's, again, everybody has a different style and everybody has a different approach. I tend to be just unstoppably blunt and transparent, and I should probably be better and more political about stuff, but I'm just not. And so when I meet companies and they start asking me questions, I consider that every meeting we have, as much as I'm diligencing their company, I expect that they're diligencing me, and I feel like sometimes people aren't. And on some level, shame on you. When if I'm going to write a $40 million check, I will have looked through every facet of your data, and like I should be able to tell you what your company does based on what your data tells me, as opposed to like any story I've ever heard from you. And that's actually like recently a test that I do with my team is like they'll take a meeting, whatever, they send me the data, and then I try to recreate the story without ever having talked to the company or looked at what they do online. And if I'm able to do that, then like clearly your data's great and like I feel very comfortable investing. But the reality is that like as much as I spend a lot of time with their data, like you should be spending time with mine. Like I have an entire portfolio. Like I'm shocked at the number of people that never asked to do a reference call with one of our existing companies. Like why not? Like that's the whole point of being in exclusivity and having a term sheet signed, is that you can get the chance to understand and like know what our background is like. So I'm shaking my head because like yeah, sometimes we also get ambitious. Like we get really excited about businesses that we're looking at. We think like we don't have the day-to-day details that we're lost in. And so we see a lot of like big picture ideas. And then that leads us to making connections around like, oh, they could work with this or go into this direction or like meet with these people or expand into this country or whatever. And there's a lot of stuff that we get excited about. And then just like any other startup, like you have to focus. And your investors, sometimes you need to focus your investors, right? Like it's a two-way street a lot of times. And I feel like you said it right when you're like, you walk in and you're like, these people are scary. Like I'm definitely not scary. I'm 5'2", and I don't wear shoes like 90% of the time. So like I can't possibly be less scary. But the reality is like if you're not going to ask me questions, like I can't guess what you're trying to learn. So it's kind of I would put the onus on entrepreneurs to really do their.
Just told an entire room that you go over the data. Oh, that's scary. That's like that in a really good way. Like yeah.
Dude, I'm like such a junkie. It's really sad. No, like seriously, like I'll go into diligence on a company and I'm just like, I put a sign on my door. I'm like, don't even talk to me. And I will stay at the office until like 5 or 6 in the morning and just like crunch through it. And I'll emerge and be like, oh my God, I found this trend. Did you guys know that like blah, blah, blah is going to happen? And they're like, no, we actually had no idea. Like this is like most of the time I find things in the data that they don't know about.
When you come charging out of your office at 5 or 6 morning.
Yeah. Yeah.
I was just going to say something quick about the reference calls. I think that it's great to ask for references, but I also will just reach out to people that I see in the portfolio that I may know. And sometimes I'll even cold email an entrepreneur because I'm an entrepreneur and they're usually pretty responsive to other entrepreneurs.
I think that's smart.
I mean, just jumping in on your point about everything you just talked about. So we're kind of a startup in our own right. I mean, we raised the fund. We're a 4-person team. We were a 3-person team that came from AOL Ventures and sort of spun out, if you want to call it that. And so we had our track record from there. And we, so after raising the fund and launching, it was very much about, well, okay, so who are we and how do we think about our processes and what do we want entrepreneurs to understand about us and sort of, just what can we do to help them? So we sort of are very, again, laser focused on, of course, we want to help with everything that we possibly can that an entrepreneur needs, especially at a really early stage and especially being an enterprise software company because you're selling into massive corporations. So the whole question is, who am I talking to? What does my lead list look like? How am I getting into those companies? What's my messaging to these companies and whatnot? So we're very upfront. We have an overview deck of our fund that literally it's about 8 pages and it's very just, this is who we are as a team. These are our advisors. These are our venture partners. This is how big our fund is. This is where we invest. This is the size of our checks, that high level stuff. And then this is why we focus on enterprise software. This is what we did our research on as to why we think your sector could be successful. And then so we shoot that out to the entrepreneur before we even jump on, the 30-minute pitch call, the 30-minute initial meeting, so that they can come in and be like, and our portfolio one-pagers so that they know what we've already invested in and who our founders are and whatnot. So that's just one process that we put in place. And then we're very focused on early customer growth. So we specifically sit on Tuesdays. We do not take any external meetings. We work specifically for our portfolio. And it's this thing that, yes, funds can promise things, under-deliver. That's definitely true. But just, as a new fund, we're really trying to put these processes in place and stick to them, because just as frustrating as entrepreneurs may be under-delivering, it can be very frustrating on your end about us. So yeah, I mean, we focusing on one specific thing: early customer growth, business development, revenue initiatives, sales hiring, all of that kind of stuff. Introductions into these huge companies. It's that's what we focus on. So it's
Now I know why I can never see you on a Tuesday.
yep.
Yep, pretty much. Know where your Tuesdays go.
Yep.
How'd you pick a Tuesday?
We do partner meetings on Tuesdays and Thursdays, so we just pick Tuesday.
Tuesdays it is.
I think one of the things that I didn't believe as an entrepreneur raising money, and I still don't know that I believe 100%. You go around and you raise from all these funds, and there's always the thesis, like you're saying, and they're like, this is what our focus is, and this is who we invest in, and we only do mobile, and we only do this, our enterprise, and we only do this one thing. And then there's the exceptions, and then you start looking at the portfolio, and you're like, oh, we only do this except for in this and this and this and this cases, and then because of these exceptions, and then you're just like, but I thought, and if you really, really break it down and look, at least from my perspective, like look at the funds, and then you look at the thesis, and then you look at the portfolio, and you really like analyze across that. What you see is like there's definitely some continuity in some of it, and you see a core, but then you see all the other ones that are just like, okay, they were opportunistic or invested in success or companies that they thought would be successful, and maybe there was like some thread because you can always draw a thread if you want to really find it.
We have had the exceptions conversation pretty much every partner meeting.
Yes.
There is something that's brought to the table, and it's brilliant. And the founder and the management team and everything are just, these rock stars, and what they're building is really cool. But, in the end, it's just so far. But I will say we have had to. It is really tough as an investor to look at something like that and be like, you know what, we have built our entire fund and what we hope to be in fund 2, and just what we hope our community of entrepreneurs to be. And it's really tough. There's other things than just not being in the enterprise sector. I mean, it's a senior advisor just decided to start a company, and do we invest in them? But then what if another senior advisor, that could be an awesome idea, but what if another senior advisor decides to start a company? We have to invest. So you just sort of you have to put your foot down about the exceptions.
The discipline
It's really, really tough, though.
the discipline you want your startups, your founders to have. You have to have the same discipline with your fund.
I actually love this conversation because I'm also like, and again, I'm coming from my perspective, right? But like, there are sometimes people that will send me business plans, and I'm just like, did you even look at our web? Like, I will tell you, we focus on like software and internet, right? And like, I grant that our definition has evolved over time based on our understanding of markets and blah blah blah. But like, there are people that will come in and just be like, look, we're gonna do $2 million of revenue this year, and I'm like, we don't go near that. Like, you're not even near a $10 million run rate. Like, that's just too small. And it's like they have this like fundamental belief that they are the exception. And I think it's because when you look at the website, you see these things that seem like complete exceptions, right? But like, and this is a conversation I was having with somebody the other day, but really what it comes down to when you're, at least at our stage, an investor, is your ability to recognize patterns. And so if you can find that pattern, you can justify the exception, but the exception it's really not an exception because it has all of those same patterns, right? And so it's very hard for outsiders to understand where we're looking for the pattern and what metrics we're looking for and like how we're benchmarking them against other things that we've done. But the reality is that we have 250 examples in our portfolio of things that have worked well and not well. And so we try to benchmark and figure out like, this is the pattern of these different KPIs in year 1, year 2, year 5. And if we're seeing these early KPIs tracking in the same pattern as the ones that were successful, for us, it's not an exception because it's like well within the bounds of what we have previously invested in. So I think it's very difficult to. No, I feel bad for you guys.
Exception makes the rule, isn't that the expression?
I've heard, like, I remember this was from one of our seed investors, but like broke down the pattern matching for me, and she was like, "This is the pattern that I look at. This is the pattern that I see, and like this doesn't work for our fund." But it's hard. It's hard as an entrepreneur because then you see that and you look around and you're like, "Okay, would you do this? Maybe." And then as an entrepreneur, you're opportunistic because you're like, "Really? Like, I need money." So maybe there's a chance that like I'll fall into that category, and it's you just don't know. So I think it's challenging. And I think once again on like the misrepresentation, there's just a lot of just like not knowing on both sides of the table what the expectations are and what people are really looking for.
You got to know people and ask questions and attend a lot of things like this.
I answer I would get like so many ridiculous. I got somebody that was like, "Are you interested in investing in an underwater casino?" And I was like, "Have you seen our website?"
No. That would be the Trump. That'd be the Trump casino they're closing down in Atlantic City. Isn't that one underwater? Yeah.
But either way, I mean, like, and I'll. I'm like a nice person, so I'll write back and be like, well, I'm sorry, we only focus on software internet. Like, this is just not even close.
Yeah.
But, like, I'll write back
That's
because
when
I
we
just
send
like,
our
feel
fund
bad.
overview. We're like, because we feel so bad too, but we're just like, really sorry.
Sounds really
no.
swell, but no. All right.
Can I come?
There's got to be questions. Oh, Kathy Leakey. Oh, yeah. Got to give the first question to you. Because, yeah. I have to do that.
I'm curious to know when you, at least from the VC side, when you approach companies proactively, because that's been happening to me a lot
All the
lately.
time.
Okay. So what
Yeah.
causes you to, like,
why do
how and where you
like,
find...
I've probably been proactively approached by at least 20 VCs in the past
Yeah.
2 months.
So I think this is also like a fund by fund thing, but our fund has an outbound calling model. So we actually have an entire slew of analysts. I came through that program who spend their entire days calling actively every company that remotely falls under, because they're also under pressure, right? If you don't do deals, you don't keep your job. So exactly, it's like the spray and pray. It goes both ways. We do it too. And so they pretty much call everything under the sun that's remotely technology. And we actually, it's really helpful for us because we have a very good view of what's going on globally in every possible sector. But that's like really, if you have a cool looking website and it looks like maybe you possibly have traction in a remotely interesting market, we'll probably call you. Insight has? Yeah, probably summer interns. Yeah. So that's
I don't need money. I'm not looking for money.
right. That's the best kind of company. Let's have a conversation. No, I mean,
Money, and we're doing great on the revenue side. So I think
Yeah.
that's part of it too. Like probably some of the PR that we've gotten. Maybe,
Yeah.
I don't know. I'm just curious because my first startup, I don't think we had any inbound necessarily. I mean, everything that all the fundraising we did was outbound. We raised about 27 million.
Is there a time, you know what?
I don't think anyone was approaching us inbound.
Because I had this conversation with Rob Hayes at a first round, actually at an ORIC event in San Francisco. Is there time to like raise money or take money even if
when
you're
you
not
don't
raising
need
it? Yeah.
Oh my God, that's like the best time to take money is when you don't need it. Seriously, because you have no pressure. You can turn down people you don't like. You can drag out the process as long as you want. You can cut the process off if you want. Like the worst thing to do is wait until you need money to try to go out and raise because then everybody can see you need it. And like that's not very comforting especially from a growth stage investor where you're like you're trying to reduce risk a little bit. Like that's the goal of being a later stage investor. But I would absolutely encourage anyone who's in a position where you don't need cash to like go out and start talking to people because now's the time to build those relationships. And even if you decide not to do it for a year, you can like get to know more about their fund. And like
Well, even what Rob was saying, he was telling some of his companies, take the money now because who knows if the
take
money's
it.
going to be around in a year.
I
he
mean,
was
but
like,
that's-
take it, put it in the
that's
bank.
like a really personal strategic decision. Like there are companies that we've talked to, like I did an investment, we were talking to it for 7 years before they were finally like, okay, we're ready to do a deal. And like, that's fine.
Stop it.
No, I'm serious. Like, but that's going back to the whole, like, it's a marriage thing. Like, I don't mind having relationships with people. It's better. Like, I get to know you. I get
Victorian
to see whether or not
courtship.
you're like,
That's not a marriage.
but I do think it's really important to, it's so much easier and it'll just be like, it's like so much cheaper when you don't need it. And the reality is most businesses can use it. Like you can find a use for it, even if it's like sit in your account for the next 6 months while you like think about the new product or think about a new marketing initiative or like TV advertising or hiring salespeople to grow your team. Like, yeah, that's my answer.
Yeah, and that's why I've been making time for the calls. I think it's important to build that network, but I don't need the money. I just make time to build relationships, as you said, and also tell our story and the traction and the
I think
trajectory of the
that's
company is important to get that word out there.
And if you're growing from 10 to 20, you should definitely be talking to us.
Got that going there. All right, in the front row.
Shameless.
Noah Smith, founder of Open Capital Exchange. Getting back to the sort of seed stage or the angel end of the investing spectrum, one of the trickiest things is just getting that first meaningful check. I wonder, there are different tactics that I've heard about that have heard employed with very degrees of success. Maybe you just, everybody on the panel has a story of like what worked, a favorite story of what works to just get that first real investor in.
I mean, my first check was my boss. Yeah, it was.
Maybe something more first outside.
First outside money was We brought on a strategic investor that I had a previous relationship with, and I had known them for about 2 years and had sort of been bringing them along with the journey and knew that they were looking for applications and were ready to commit. And actually I had a really great relationship with Rothenberg Ventures. They invested like immediately. I don't know what I would have done without them. I literally 30-minute phone call with I guess the associate at the time, and looked for 3 things, passed all 3 checks, got on a 30-minute phone call with Mike, passed all 3 checks, wrote us a check for $100K that went in our bank the next day, and all of a sudden I got paid. I hadn't gotten paid in like 5 months, I think. So it was really great, and them being willing to commit made other people more confident to commit. I think you said you don't have to raise the 1 million at once. Nobody tells you this. Nobody tells you that you don't have to raise all 1 million. I didn't even know until like we had our lawyers on board and like we were starting to take checks, and I was like, oh my God, what if we don't hit the 1 million right now? And they're like, you don't have to close it all now. I was like, what do you mean I don't have to close it all now? And they're like, well, the way that it's written, like you only have to close like the first like $500,000 now. I was like, what? That's a thing? It has been a learning experience. But once you have some money, it makes it so much easier to get more money. And I think funds like them, I would speak highly of them. Funds like them that are willing to sort of like not put you through like meeting after meeting after meeting after meeting, move quickly in the beginning when you are talking small amounts of cash, be very direct in what they're looking for, and basically check some boxes and give you some traction, but also give other investors confidence, is really beneficial.
I would say, sorry.
Yeah. Go ahead.
Well, I just really quick, and sorry, sort of sticking to the theme of the whole like networking and relationship thing. That's very important. Like from an investor standpoint, we do look, like if you're going to get your first small check, and then you sort of start to, your relationships sort of start to spider web out, and a lot of funds talk, especially early stage funds. We don't. It's not necessarily a competition day to day of like who's getting in on what deals and whatnot. We talk. We share deal flow. We ask. When we're doing diligence on a company and we see that someone else is looking at it, we'll sit with them for an hour or 2 and talk about why they're looking at it, why are they excited about it, that kind of thing. And also, like sort of going on your question as well is. We, on our end, our relationships are huge. Our service providers, we have a lot of inbound deal flow. So having excellent relationships with your service providers, legal team, your bank, everything that makes up your back office, we know all of them. And that's where a lot of our deal flow comes from. So, people like Oric and SVB and Square One and just every Lowenstein, Sandler, all of these people, we get deal flow from them. They tend to really know what our fund is about and, what other funds are looking for. And so that's just, if it's a lot about the referral. So if we get an inbound, deal from Ed Zimmerman and he's like, this is fantastic, you should take a look, and it happens to be in our wheelhouse, we will say absolutely and see who else is looking at it, talk to the other funds. So it's sort of this internal thing as well on our end.
That's a great point on the service providers.
Yeah, Ed Zimmerman. Yeah. Yes, Lowenstein and Sandler.
I know. Or Chad Lynch. We love Chad Lynch.
It is a concert I was at in Toronto, and it was sponsored by Labatt's, and the singer sat there talking about how much he liked Molson's. I'm like, bad branding, not a good thing. But no, it's like it's like finding those service providers, and it's again like your investors who has got that network of relationships. It's going to open doors because when I think about interviewing Rob Hayes, that's what he said. I said, where do you get your deals? He goes, from my network. And it's like, okay, you got to find someone who knows those people because there's such a barrage of information. Anyway, Tanya, you were going to say?
Yeah, I agree. I think a really important thing for us was understanding how long it took each person to make a decision. And so that's what we would ask at every meeting. And so understanding like what it took to get to a yes or a no and making sure that you get a yes or a no. I think that some people try to drag it out and try to be in this maybe stage. And for us, it was important to get a yes or a no. And it was interesting too, and going back to like the angel stage, it was interesting because we got some yeses in the beginning and but we didn't have the full round. So that's why I was talking about the whole being able to close part of it in the beginning. And so we got a yes from Alexis Ohanian. He was one of the first yeses. And we were really excited about him. And we just didn't, he was just like, yeah, let me know when you have the paperwork. We didn't realize that we could do a separate note with him and just like close it and have the money. And so and then when we were thinking about it, we were just like, let's just ask him if he can just do it. And so we just asked him and he did it and we had the money like in 2 days. And it was just kind of like that thing where I was just like, why didn't I do that earlier? Why didn't I do that a week ago? And I didn't have to stress out about, fulfilling an order from our past company in order to make the next paycheck. And so I think that understanding, like, once you get that yes, how to get that actually, like, that money in the bank, and, like, understanding if they're willing to just do a separate note or, like, a separate standalone round, not in a round, but, like, being able to, like, transfer that money early on. So we had a smaller round in the beginning with Angels, and that helped us a lot. And so making sure, just being able to, like, draft up that paperwork and send that over and then get the wire in is like, the logistics of that was important.
And I think part of the question is, that first bit of money you're going to get is going to come from somebody you know. And someone who believes in you. And that's why sort of the networking and getting to know people, or thinking about who your wider network is in terms of who you're able to ask. When I think that I've come in early and might have been the first check on the few angel investments that I've made, it's because I've known the founders, I've watched what they've done, and a hugely important point for me is they better put their own money in it. If I don't see that the founders have personally invested their own money, I'm not in. And that to me is really important. It's sort of like, if you're not willing, I know you're putting in your own sweat and your own time, and I'm doing that now with Cuurio, but there's also something about writing your own check and doing that, because you're asking investors to take a risk. If you're not willing to take a risk on yourself, the other point I would want to say, like, to get down to all this is, and so much of this, and I think so helpful to talk about the research and what you learned and what you didn't learn, but do your research on these investors, because sometimes, as I said, it's all about the relationship. And so, one of the angel groups who I love is New York Angels, and the gatekeeper is Vanessa. Do not ever ask her a question where the answer is on the website. You will be dead in the water. You will not get any further. Like, she's like, like, you want to get into New York Angels, understand that website, then go and ask them the question. If you can find the answer on the website and you ask her, like, cut off. Yeah, like, who they are, how to operate, because it does come down to this communication. Let's take one more question. Oh, back row.
Hi, I'm Nicole Sanchez, founder of Vixen. I have a question for you, Tanya, but I also would like it for the group. It is specifically on this point around researching your investors. So when you talked about finding strategic investors, I'd like to think about, or you're very strategic in finding your investors. I'd like to understand your diligence process. What questions did you ask them? What research did you do in advance? You mentioned a little bit about speaking to other founders. Let's get at it.
Yeah.
Your obsession, your full-time obsession with finding your...
all my cyber stalking. I think it comes actually because... I don't know if you guys all do this, but I research everyone that I talk to. Like I search their email, I search their first name, last name, I search their full name plus their company name. I read everything that not everything that they've written, but like the main pieces that they've written. I research their background, their LinkedIn, their Facebook, their Twitter, everything. The person that you're meeting specifically. And I don't always disclose all of that because sometimes it can be kind of creepy, obviously. But I think it's useful to understand the context and where they're coming from and what their background is. And I think it'll frame the conversation and even your pitch, because I think that some things will resonate more with some people than it will with others, and understanding their point of view and how they view the world is important. First researching the person, because you're talking to a person, you're meeting with a person, and then researching the fund and understanding the history of the fund. Who are the founders? Why did they start the fund? How big are their checks? Do they lead? Do they not lead? This is all what I put on the spreadsheet, like lead, not lead. And so that was like the types of questions that I would ask them usually came from things that I couldn't find online, going back to like being able to research the New York Angels. So anything that I couldn't find online, understanding how helpful they were, like where were their strengths, are they helpful or do they not see themselves as like a strategic person? Because some people will be straight up and just say like, I just write checks and that's what I'm gonna do. And that's helpful too, because like sometimes you just need to check. And so that was like part of like the obsession, but a lot of it is like just really truly trying to understand the person and the firm.
To add one bit onto this, the spreadsheet aspect of it, one of the challenges that we ran into early on when you are making that spreadsheet, and it gets very, very long, and you're just like, God, I feel like I've talked to everybody, and you have all of these notes about everyone, is you want to continue having these points of continuous contact with these people. You know, you want to build the relationship, and all of a sudden you've got like 100, 200 people on a spreadsheet, and you're like, God, how do I continue relationships with all these people? And I'm forgetting who's who, and I'm not actually building here now. And what we did very quickly, realizing that wasn't scalable, was I started this really simple tradition that I still do actually. That's just a Sunday email. And every Sunday I send an email out. Now it's been a little bit pared down to a more select group of our investors. But for a long time, anybody that I talked to that was interesting, that was helpful, that was engaged, that was excited about the company, that could potentially invest, went on this email. And I just kept them in the loop. Every Sunday I would sit down and like, whether I was good mood, bad mood, out of town, in town, I literally still do it every Sunday. And I would send out this email. And what we found out was investors that we had begun relationships with in the beginning that had sort of fallen away would come back. And they would come back and they'd say, hey, I see the progress that you've made. And I see, you've taken me on this journey with you. And my concerns that I had have now gone away. And now I would like to, invest and participate in this round. And we actually got a considerable amount of our round closed because of that. We brought on our lead investor as a result of it, somebody who I spoke to in the very beginning, had a relationship with in advance of starting the company, said we're going to watch from the sidelines for a while. Took them 4 months of receiving an email every Sunday, came back into the picture and wrote us I think a $500,000 check or something like that. And that happened with quite a few people. So I think, using
It's a good use of your Sunday time.
Yeah, it is a good, and it's time consuming, and actually I think the best thing about it now is that it really keeps you in check, because I know that if it's Sunday, it keeps you honest with yourself. If it's Sunday, I'm like, oh, I don't want to write this email. Like, maybe I need to have a talk with a team on Monday because like something's not right, obviously. Like I'm not feeling good and I have to like tell people that I'm not feeling good about things. And that's okay. That happens. You're not always feeling great. And if it's Sunday and I'm really, really excited, I'm like, yeah, let's like celebrate and like really recognize people, for the amazing work they're doing. And that is great. And sometimes it's that too. But I think the spreadsheet and the diligence, and then using that as a basis to really form continuous conversation, with your network that you're building and the people you meet, is a really a great way to continue those conversations.
Yeah, I just want to. Yeah, I am. No, I mean, kind of. No, a point of advice would be that ultimately, in my experience, again, limited sample size, but I think what really matters is relationship that you feel with the person. And it's like a matter of chemistry, and it's like, could you go out and grab a beer with this person and be fine with it, or would it feel like work? And if it feels like work, it doesn't matter how awesome they're funded. It doesn't matter what companies they have in their portfolio, because if it feels like work, it's not going to be fun, and you don't know how long you're going to be together. And you can say, like, I'm going to exit in 3 years, and for all you know, the world could blow up tomorrow, and like, shit, you're stuck together for 10. And like, we have companies in our portfolio that we've been in for 12 years now, right? And like, if you can't appreciate the people that are on your board, it's going to suck. And ultimately, from what I can also tell, like, we're all more or less equally intelligent, equally researched, equally connected. Like, we may have different connections, we may have different perspectives, but like, everyone that you talk to, at least, I shouldn't say this, I'm helping our competition, but like, whatever, everyone on our level is more or less going to be, useful to you in some way. And it really just comes down to like, do you like this person? Like, would you invite them into your house and introduce them to your family? Because if you wouldn't, like, they're not your friend, probably not worth working with. Like, I don't know. I know everybody's families that I work with. Like, I've met all their kids. Like, I would babysit them if they wanted me to. Like, it's a very close relationship, and it's really nice feeling like these people are your friends beyond just like the workspace.
I would say, do you want to have a beer with them? When I was practicing law and we'd interview associates, like, okay, due diligence, stuck in an airport in Des Moines for 6 hours. Could I handle it with this person? Yes.
Yeah. Exactly. But it's true. It's like I can't think of a single
Think of
person
a
in my
hellish
portfolio
thing
where I'm
stuck with
not,
that
like,
person. Yes.
Yeah, I play beach volleyball with some of them, and I'm
Yeah.
going skydiving with another group, and like it's like really fun to feel like they care about having me in their company. Like I have a voice with them because they respect my opinion, but like we're also very friendly, which is just more fun than like walking in and having to be like, show me your spreadsheets and like, great, see you next
Oh, you've
quarter.
already
Like,
ripped apart their data, so you can get to the fun stuff.
Yeah.
Yeah, one.
I
Go
have
for it.
one point. Well, to your point, that's so true. I mean, I have a company that I was looking at, and it was sort of in our wheelhouse, but not. Again, like that whole question of exceptions. But we had just a hilarious first experience together at a coffee shop that they just happened to email me last week saying, the two founders saying, hey, this is the progress we've made. Like, we ended up going to get a beer after the coffee because we had to get out of there. And so it's like, it was very casual, but hey, here's where we are right now. We're making this progress. We're actually, talking about this whole B2B play right now. Can we catch up? Let's go grab a beer at the Fox. And I'm like, yeah, I'll see you a week from now, 6 p.m. I'm not even diligencing these guys, and I want to hang out with them because I like what they're doing and would love to help them out down the line, give them advice and whatnot. But one really pointed piece of advice on the whole spreadsheet thing and keeping up with your investors, if you don't use Relate IQ, you should. We use it to monitor deal flow, and we have this whole thing, the same on your end, where you want to keep in touch with investors and whatnot. We want to keep in touch with entrepreneurs. I mean, they come to us, we want them to be part of our family, whether or not they're part of our portfolio. And so, we want to be friends with the whole community if we can. So, but Relate IQ is fantastic. They just got eaten up by Salesforce. But it's so customizable, and it actually has one of the tools that we use, or one of the features that we use, is it tells you how long, you can customize it in this sense too, but it tells you how long you've been out of touch with the person and when your last communication was with them. And you can say, I want to talk to somebody every 15 days or every 3 months or whatnot. And it alerts you, and you can have a million different lists. This is seed stage funds. These are guys that lead. These are guys that don't. It's so fantastic. It's really bare bones. I am not an investor in them, but we use them. But yeah, I would suggest, if trying to get on Relate IQ and use that, it would organize the crap out of you.
Takes time. You got to do it. Go for it.
Yeah, and that's a really great point. I'm going to check that out tonight. But I completely agree with also the casual environment. Like, I did so much research and I prepared so much just because I like to, partly. But I also met two of my investors at South by Southwest because we were drinking at a party, and I talked to him about the vision, and then we met afterwards. And so yeah, you can do all the preparation in the world, but at the end of the day,
You also don't
meeting
have
with the
to
person.
drink to raise money. That is not the point of this panel. I feel like that is.
You can do all the but you can do all the research in the world, and sometimes it's just flat out timing and serendipity.
It's being able to have a conversation, put the pitch away, sit down, talk to us about. We're all about that. Put the pitch away. Come in, sit down, chat with us, tell us about your idea, and then let's get into the nitty gritty of, okay, do we want to move forward? And
This is completely unrelated. I just have to say, the worst is when like someone puts up a deck and they start walking you through their slides, and you ask questions and they're like, I'm going to get to that in a minute. And you're like, but why can't we just have why do I have to wait? Like, I just have, it's like so horrible. It's the most annoying thing ever. And you'll just be like, okay, but by
No, it's
you're
like doing
ruining the flow. I don't know.
But it's also doing the research on how and when and what do people do, and that's where you ask,
and
and
have
that's
the answer, right? And it's
right.
fine to be like, oh, I'm glad you're bringing that up. Here's the slide that answers your question. But like to have to tell somebody
but also knowing how you conduct a meeting and doing the research and talking to other people who you've invested with to say, who is this
But I
very
don't know if you would
VC
know
and how
that. Also, I like suck at researching people. So I'm like the polar opposite. I'm terrified to research anyone that I'm meeting with, because then I'm afraid that they're going to seem so impressive that I'm going to be shy and like feel crappy talking to them. So I actually like generally like don't know anything about people that I meet with, and I'm like, I'm really sorry. I actually
give her the
intentionally
data.
didn't do it because I just didn't want to be afraid of you. So yeah, it's scary in both directions. But no, I seriously, like, if you're gonna go talk to an investor and you're like walking them through and they have a question, just answer it. Like, take the opportunity to like create a conversation instead of like having them feel like a student in school and you're the teacher like lecturing and they have to take notes. Like, that's the worst relationship ever.
Yeah, that's not, communication 101.
Terrible.
All right.
Communication 101.
Seriously, don't even. All right, I'm going to put down the mic now. I'm going to thank Oric so much for hosting tonight, and I want to thank all the panelists and Joy, who left the keynote, who was amazing.
That is really
Thank
rude.
you all.